Get ready for market-moving action. I'm breaking down 18 key economic events for the week of May 18th to 22nd on NorthFlow Finance. Let's dive in. Welcome back to NorthFlow Finance. I'm your economic analyst. On Monday, May 18th, we're expecting two key economic events out of China that could have a significant impact on Canadian markets. First, we have China's industrial production year-over-year for April, which previously came in at 5.7%. The consensus is expecting a slight decline to 5.5%. This is a crucial indicator of China's manufacturing sector, and a weaker-than-expected reading could weigh on commodity prices, which in turn could affect the TSX, particularly the materials and energy sectors. We're also watching China's retail sales year-over-year for April, which previously came in at 1.7%. The consensus is expecting an increase to 2.2%. A stronger-than-expected reading could boost demand for Canadian exports, which could be positive for the Canadian dollar. However, a weaker reading could have the opposite effect, putting downward pressure on the loonie. Now let's move on to Monday, May 18th. Welcome back to NorthFlow Finance. On Tuesday, May 19th, we have a packed schedule of key economic events that could significantly impact markets. First, Japan's GDP growth rate is expected to slow down to 0.1%, a decrease from the previous 0.3%, which could affect global economic sentiment. In Australia, the Westpac consumer confidence change is forecasted to improve to -1.1%, a significant increase from the previous -12.5%, which might boost the Australian dollar. The United Kingdom's unemployment rate is expected to rise to 5.1%, up from 4.9%, potentially weakening the pound. Lastly, Canada's inflation rate is forecasted to rise to 3% year-over-year, a significant increase from the previous 2.4%, which could lead to a stronger Canadian dollar and impact the TSX. A higher inflation rate could also lead to increased interest rates, affecting the Canadian economy and markets. Now let's move on to Tuesday, May 19th. Welcome back to NorthFlow Finance. Today we're looking ahead to Wednesday, May 20th, and the key economic events that could impact your investments. On Wednesday, the United Kingdom will release its inflation rate year-over-year for April, with the previous reading coming in at 3.3%. The consensus expects a decline to 2.6%. This inflation rate indicates the rate at which prices for goods and services are rising in the UK, and a lower reading could lead to a decrease in interest rates, which would weaken the pound. For Canadian markets, a weaker pound could lead to increased demand for the Canadian dollar, potentially causing it to appreciate against the pound, which could impact exports in the TSX, particularly for companies with international exposure. A lower inflation rate in the UK could also lead to a decrease in interest rates, which could have a ripple effect on global interest rates, including in Canada. Now let's move on to Wednesday, May 20th. Welcome back to NorthFlow Finance. On Thursday, May 21st, we have a packed schedule of key economic events that could significantly impact Canadian markets, the TSX, and the Canadian dollar. First, the United States will release the FOMC minutes, which will provide insight into the Federal Reserve's decision-making process. This could influence interest rates and subsequently impact the Canadian economy. In Japan, the balance of trade for April is expected to shift to a deficit of -150 billion yen, from a surplus of 667 billion yen previously. This could weaken the yen and affect Canadian exports. In Europe, Germany's S&P Global Manufacturing PMI flash for May is expected to rise slightly to 51.6, while the United Kingdom's Manufacturing and Services PMI flash are expected to decline to 51.2 and 51.7 respectively. These numbers could impact European trade and subsequently affect the TSX. In the United States, building permits and housing starts for April are expected to decline to 1.35 million and 1.45 million respectively. This could affect the Canadian real estate market and the Canadian dollar. A weaker U.S. housing market could lead to a decline in the Canadian dollar, which would be beneficial for Canadian exporters. On the other hand, a stronger U.S. housing market could lead to an increase in the Canadian dollar, making exports more expensive. Now let's move on to Thursday, May 21st. Welcome back to NorthFlow Finance. I'm your economic analyst. On Friday, May 22, 2026, we have several key economic events to watch. First, Japan's inflation rate for April is expected to come in at 1.8% year-over-year, up from the previous 1.5%. This could have implications for the Bank of Japan's monetary policy and potentially impact the Canadian dollar. In Europe, Germany's GfK consumer confidence is expected to decline to -34, while the IFO business climate is forecast to drop to 82. These negative sentiment indicators could weaken the euro and have a ripple effect on the TSX, particularly on export-driven sectors. In the UK, retail sales are expected to slow to 0.3% month-over-month, down from 0.7% previously. This could lead to a decline in the pound and influence Canadian commodity prices. That covers all the key events for next week. Now let's look at the broader economic outlook. Welcome to NorthFlow Finance. I'm your Canadian economic analyst. This week, we're expecting some key data releases that will impact the Canadian economy and the Bank of Canada's policy decisions. On Tuesday, we have the Canadian inflation rate for April, which is expected to come in at 3%, up from 2.4% in March. This increase in inflation will likely keep the Bank of Canada on track to hold interest rates steady, but it also increases the chances of a rate hike later this year. The TSX market is expected to be volatile this week, with investors watching the inflation data closely. A higher-than-expected inflation rate could lead to a sell-off in the market, while a lower-than-expected rate could lead to a rally. The Canadian dollar to US dollar exchange rate will also be impacted by the inflation data, with a stronger Canadian economy and higher interest rates potentially leading to a stronger loonie. Canadian investors should be watching the inflation data closely, as well as the Bank of Canada's language around future rate hikes. We're also expecting some key data releases from the US and other major economies, which will impact the global economic outlook and potentially affect the Canadian economy. With the Canadian inflation rate expected to increase, investors should be preparing for potential changes in the Bank of Canada's policy. Now let's look at the global economic picture. For the week of May 18 to 22, 2026, we're expecting a plethora of key data releases that will shape the global economic outlook. On the US front, all eyes will be on the FOMC minutes, released on Thursday, which will provide insight into the Federal Reserve's interest rate decisions and their implications for the global economy. This will be particularly important for the Canadian economy, as US monetary policy often has a ripple effect on Canadian exports and the TSX. In the UK and Europe, we're watching for signs of slowing economic growth, with key releases including the UK unemployment rate and inflation rate, as well as the German IFO Business Climate Index. These indicators will give us a sense of the region's economic trajectory and potential impact on global trade tensions. In Japan and the Asia-Pacific, we're looking for signs of continued growth, with releases including Japan's GDP growth rate and industrial production data from China. Commodity prices will also be in focus, as they often have a significant impact on trade tensions and global economic growth. Overall, the data releases next week will provide important insights into the global economic outlook and potential trends for the coming months. With the US Fed's decisions, UK and European economic trends, Japan and Asia-Pacific outlook, commodity prices, and global trade tensions all in play, it's shaping up to be a critical week for investors. That's our global outlook for next week. Stay informed and invest wisely. Thanks for watching, subscribe for updates, and remember, this is not financial advice. Consult a professional before making investment decisions.